Hello, it's Monday the 16th. I'm FxPlew and this is the market brief. So last week's GDP data left the market rather confounded. Against the backdrop of political upheaval, industrial action, inflation and the residual effects of Brexit, the wider expectation was for continued economic weakness in the UK. GDP was actually expected to contract by 0.2%. But then we had the World Cup. We all went on the lash, boosted the hospitality sector and delivered 0.1% economic growth. So tell me again how football doesn't matter. Of course, this doesn't change the inevitable, and we're still on the back foot heading towards recession in the UK, but this may have given a stay of execution before the technical requirement is met, where we need 2 consecutive quarters of negative growth to qualify for a recession. We have employment data out tomorrow, which is expected to show the claimant count rose by about 35,000. That may push the unemployment rate to 4%. We also have inflation data due this week. Headline inflation is expected at about 10.7%. Down just a little bit, but before we get carried away, any such dip will likely be driven by cheaper fuel, so let's not get ahead of ourselves. The Bank of England is still expected to continue voting for further rate hikes. It's a similar story in the US, with discussions about recession risk continuing stateside as well. Those feeling that recession will be avoided are buoyed by the employment data and the continued pace of new job creation despite all the Fed rate hikes. The contrary view sees recession in Q2, expecting the continuing rate hikes to choke off demand soon enough. Either way, it is employment data that is the key here, and rising unemployment will be an important leading indicator. And either way, the Fed is expected to pause rate hikes sooner or later, but that will only happen when the Fed believe inflation will not return. Who knows? Perhaps they'll need a recession to deliver that level of comfort. Currencies remain pretty flat, and the dollar is struggling with the market expectation that the Fed will taper their rate hikes before either the ECB or the Bank of England follow suit. That said, neither sterling or euro is attractive enough for the market to plough into at the moment, so we're stuck in a bit of a Mexican standoff. Last week, sterling peaked at around 122.50 against the dollar. We opened the new week from around 122.40 against the dollar. We're about 112.90 against the euro, and euro dollar is around 108.40 this morning. That's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.